Hi, it's Valerie from VMCPA here with you today to talk about vehicle trade-ins. I had a colleague from an online user group. She posted the other day, "Hey, does anyone know of any videos I can watch to teach me how to post the journal entries for a vehicle trade-in transaction?" And I said, "Well, I can't think of one, but I'd be happy to make one." So here we are. She sent me some sample data, and we're going to work that through together today. And then by the end, we will create some journal entries. One thing to note when handling a vehicle trade-in transaction, things changed recently. With the Tax Cuts and Jobs Act that came in late 2017, effective 2018, we can no longer roll forward and defer the gain on the sale of the old vehicle. We used to be able to calculate that gain and then not actually recognize it on a tax return, and instead roll it forward and defer it until the new vehicle was sold later down the road. But now that's no longer allowed. So instead, our journal entries need to reflect what is effectively the sale of an old vehicle and the purchase of a new one. So with that in mind, let's get started. So what we have here is some sample data, and just as I'm looking at this, I realize that there's a misspelling. It says equity on trade-in. That's just a little cute mishap there, so I'm just gonna leave that. But anyway, what we have here is the purchase price, including sales tax, negotiated amount of $55,000. And also negotiated was the allowance for the used car trade-in of $27,000. The buyer had a $26,000 loan left on the old vehicle, which was extinguished as part of this transaction, which left us with $1,000 credit to roll forward into the purchase of the new vehicle. The buyer also got a $5,000 rebate from the manufacturer, which gave us $6,000 then to put into the new car, which left us $49,000 to cover. But wait, there's more. We have a whole list of sundry processing fees and transaction fees and so on that we need to account for. So ultimately, our financing needs to cover $49,846 worth of costs here. So that's the basic lay of the land. Then we have to look at the vehicle that was disposed of or traded in, and we have this old Toyota truck whose original purchase price was $40,000. Depreciation taken on this truck over the years was $31,000, which leaves us a book value of $9,000 on that Toyota. Next, let's take a look at the sample chart of accounts that I've created. It's just a selection of the general ledger accounts that you'll need to post the journal entries in this situation. I have created two vehicle accounts, asset accounts, one for the old Toyota truck and one for the new Ford F-250. Likewise, two accumulated depreciation accounts, one for the Toyota truck and again, one for the Ford F-250. In the journal entry, you won't actually use this accumulated depreciation for the new Ford because it's a new vehicle. We haven't actually accumulated any depreciation yet on it. But I put it here in the list of the chart of accounts just for sake of understanding that eventually you will need one, and for symmetry, so you understand the general lay of the land here, that every asset is going to have a main asset account and a related depreciation account. Likewise, we have two vehicle loan accounts, one for the old Toyota truck and one for the new Ford. We also have a licensing and fees expense account here. Why did I do that? I'll explain that in just a moment. And finally, we have the gain loss on the disposal of assets account. And that would be in your QuickBooks file, an other income type account. So why did I pull out that licensing and fees as a separate general ledger account? Well, it's because when you look at this list of total charges, You see, most of them are associated with the actual purchase, the filing fee, the processing fee, the government title fee, and so on. But licensing and registration is actually an annual recurring expense. So we're going to record it as an expense this year rather than as part of the vehicle purchase price. So speaking of purchase price, let's hop over and calculate that. And here we have the purchase price calculation. So we start with a negotiated purchase price of $55,000, and we subtract from that the rebate of $5,000, which is essentially a discount on the purchase price. And then after that, we have the $782 of other fees. So that is the total of miscellaneous fees here of $846 minus the $64 of license and registration. So that lands us with a total purchase price of $50,782. Next, let's take a look at the transaction for the sale of the Toyota, the old vehicle. What is the sale price of the old vehicle? It is the trade-in allowance. The original amount up here in the data that was given to me by my colleague, $27,000. And then below, we calculated here in the Toyota truck data, the book value of the Toyota. So we take the $27,000 trade-in allowance, subtract the book value, and we have the gain on the sale of the Toyota. So with all of that, we have the data we need, and now we can post our journal entry. So let's start by removing the original truck. So we said that that purchase price, the original purchase price of the Toyota truck is $40,000, so we're taking that off. And now we're removing the accumulated depreciation of $31,000 off the book by posting a debit there. And next, we're going to clear the loan that was dispatched in the trade-in of $26,000. And we're going to record the previously calculated gain on the disposal of assets of $18,000. Well, that looks great, except that our journal entry is out of balance. Our credit is $58,000, but we have a debit only of $57,000. What's the deal? Well, the deal is this difference here of $1,000 of equity on trade-in, the trade-in amount of $1,000 if the transaction stopped here, and it doesn't, but if it did, we would have $1,000 in our pocket. And so just as a placeholder for the purposes of this exercise, I'm going to put in $1,000 just so that the transaction balances. But in real life, that $1,000 is going towards the purchase of the new vehicle. So let's record that, and we're off to the races to record the purchase of the vehicle, the new Ford. So here we are putting the Ford vehicle in place with a new asset. That's a debit, $50,782 that we calculated up here. Next, we have the licensing and fees cost of $64 that I discussed earlier. And last but not least, we have the vehicle loan of $49,846. That is the one that we calculated over here, the amount financed. So with that, our journal entry balances, debits and credits, each total $108,846. Now, when you post this journal entry in your QuickBooks file or whatever software you use, please do not enter or attempt to enter these cash placeholders. This is just a mental plug to help you understand the two different parts of the transaction. First, the sale, then the purchase, and how those two get elided from one to the other is this $1,000. But of course, it's a debit and a credit, and so they wash against each other, and there's no need to actually post that in the QuickBooks file. So there you have it. Vehicle trade-in journal entries. Like I said, it's a barrel of laughs. I hope you actually did get something out of it. I really appreciate you watching to the end. If you did get something out of it, be sure to give this video a like. And if you want to see more videos like this, hit the subscribe button. I'd love to hear in the comments below if you have any questions or thoughts, or maybe you have a different way of doing this, and I'd love for you to share it with us all. Until next time, thanks for watching.